Hi, Darren Mangum here, securities lawyer with the law firm of Mangum and Associates. Hope you're well. Thanks for watching my YouTube channel. I've been practicing over 26 years now and been doing this YouTube channel for, about the past 12 years, 12, 13 years. So I appreciate everyone's comments and hopefully this is valuable content. I wanted to chat today about some of these private equity SPVs, late stage SPVs, special purpose vehicles. In particular, commenting on this Wall Street Journal article about SpaceX shares that vanished before the IPO, and some people are like, "Well, hey, man, I bought," and it talks about it in this article, people that bought shares through SPVs before the company went public. And then when the company went public, they expected to cash in because they invested, maybe years earlier at a very much lower valuation than what the IPO is at. And so, and people say, well, how can that be possible, right? Well, so when the company went public, they thought, oh, great, I can sell, and then lo and behold, the vehicle or the entity which they invested through to get those shares, they weren't buying those shares directly. They were buying it through an SPV. And again, these private funds, and this is totally legitimate. We do these all the time. But people say, well, how can the shares just vanish, right? Well, apparently in these cases, some of these SPVs, they sold the shares to another fund before the IPO. And so, and people a lot of times don't realize that when you're buying the shares through an SPV, sometimes you've got to peel back the onion to see who's really behind these shares. Am I obviously, if you were buying them directly from Elon, right, Elon Musk, then okay, well then, yeah, that would be pretty direct, right? But most people don't have that opportunity. They've got to go through someone else, some maybe lower level engineer that may be selling their SpaceX stock. And it doesn't have to be SpaceX. Pick any, especially in the high tech space, OpenAI, Anthropic. We've seen it across the board. But these hot companies that are just growing fast, the demand is high to try to get in at an early stage before they go public, right? And so they'll buy into these SPVs, special purpose vehicles, that supposedly have bought the shares from like maybe a low level engineer or someone, but in some cases they're buying it from another fund who had maybe access to those shares, or even maybe just even an option contract, right? And so as you peel back the onion, and apparently in this case, let's talk about this one case where the entity, late stage management, had bought what it thought were basically a contract from another fund, another SPV, who then had a contract. I mean, there was like at least 2 or 3 layers of contracts between themselves as the SPV and obviously the investor, right? And so in order for them to get those shares, they think it's pretty simple. Like, okay, the company goes public. Where's my shares, right? Give me my shares so I can either sell them or do whatever. But the problem is they were layered, number one, into this initial SPV, who then had bought from another fund, and who bought from another fund, who apparently that fund that was closest to the actual stock sold the shares that they had in their possession before the IPO to another fund, right? So it basically pulled the rug out from under them. Now, supposedly, you'd still be entitled maybe to the profits, at least on paper, that, hey, whatever you sold the shares for pre-IPO, we're supposed to get a piece of that, right? But you're not going to get the shares because they were sold even, so a lot of it is even beyond the fund's control, right? And so And again, we have clients who do this all the time. We help structure these funds, and they make a ton of money. They buy these, whether it's early stage, late stage, private equity investments in some of these really popular asset classes, these high tech firms, these AI companies. And they're going to potentially cash out when it goes IPO, right? But then again, you've got to really peel back the onion, especially if you're an investor, right? You really got to then do your due diligence, make sure you get their PPM and you dive into it. If you don't understand it, then you got to hire an attorney to look at it for you and say, hey, I'm buying a private equity interest in this fund. Who owns what? What are we really getting at the end of the day? And is that fully disclosed? And if you can't really drill down to bedrock, to the actual shares themselves, or the more layers there are between your investment and the actual investment, you're going to have maybe a hard time actually getting to that actual asset, And again, people are doing it legitimately. There are others out there who are a little unscrupulous, who, don't, and, just, reading the article, it's like, okay, maybe these guys are just moving fast and furious. And, hey, we're just going off somebody's word, that, hey, we've got these shares, or, we've got a contract for a contract for a contract, right? So make sure you do your homework, right? If you're buying into one of these things, or if you are structuring one of these things, make sure you've got a good securities lawyer, making sure you do disclose that, hey, we don't have access to these shares directly, but it's through a contract, maybe it's an option, whatever it is. That way you don't get in trouble if things go sideways. So anyway, but super interesting, fascinating times. It's a great time to be a securities lawyer and a great time to be an entrepreneur. Honestly, it's no better time to raise capital, especially in the AI space, high tech space, where it just gets better and better. So anyway, but be careful out there. And if this is helpful content for you, feel free to share, subscribe, comment. I do try to respond to the comments. Appreciate you watching, and we'll see you on the next video. Thank you.